Income taxation, things to remember, chapter 6. This is for final tax, right? Individual final income taxes on special income. Gross income taxation, otherwise known as final income taxation, refers to a taxation process scheme whereby a final or single income tax rate is imposed on a certain type of income, such as capital gain or passive investment income based on their gross income. Final income taxes for resident citizens, resident aliens, non-resident citizens. Number 1, final income tax on sale of capital assets. Letter A. In general, capital gains from sale of real property located in the Philippines, if held as capital asset, is not deemed as principal residence. If sold to government, the taxpayer has the option to either treat it as this transaction as subject to final income tax or subject to basic income tax. So, capital gains from sale of real property located in the Philippines, if held as capital asset, not deemed as principal residence, 6% of sale price or fair market value, whichever is higher. Capital gains from sale of real property located in the Philippines, if held as capital assets and considered as principal residence, subject to certain conditions, 0% are exempt from income tax. In general, capital gains from sale of shares of stocks in domestic corporation, if held as capital assets sold outside the stock exchange, final income tax on capital gain per transaction basis, and also final income tax on net capital gain per annum basis. So the capital gains from sale of shares of stocks in a domestic corporation, if held as capital assets sold outside the stock exchange, 5% on first 100,000 or less capital gain plus 10% on the excess over 100,000. And the last one for final income tax of sale of capital assets, capital gains from sale of shares of stocks of domestic corporation sold through a stock exchange or through initial public offerings. 0% are exempt from income tax but subject to percentage tax. Alright. Number 2, final income tax on passive investment income. Passive investment income. So the other one, the first one is capital assets. The following items are passive investment income. Alright. Interest income on bank deposits in the Philippines, that's 20%. Yield monetary benefit from deposit substitutes, trust funds, or similar arrangement in the Philippines, 20% also. Royalty income in books, literary, musical works in the Philippines, 10%. Other royalty income in the Philippines, 20%. Prizes earned in Philippines, if 10,000 or less, this will be part of gross income subject to basic tax. If 10,000 or more, it's 20%. Not 10,000 more, it's 10,001 more. Yeah. Other winnings in the Philippines, except from income tax, is from Philippine charity sweepstakes and lotto draws, 20%. Interest income from depository bank under the expanded foreign currency deposit system in the Philippines, exempt if received by non-resident citizens, so 7.5%. Cash property dividend from a domestic corporation or from a joint stock company, insurance company, mutual fund company, or from a regional operating headquarter of multinational corporation in the Philippines, 10%. Share in the distributable net income after income tax of ordinary partnership in association, a joint account or a joint venture or consortium which are taxable as corporation in the Philippines. Interest income from long-term deposits or investment. The other one, the share in distributable net income from income tax of ordinary partnership and association, a joint account or a joint venture or consortium which are taxable as a corporation in the Philippines, 10%. Interest income from long-term deposit or investment if maturity period is 5 years or over, in the form of savings, common or individual trust funds, deposit substitutes, investment management accounts, and other investment evidenced by certificates in such form prescribed by Bangko Sentral ng Pilipinas in Philippines, 0 or exempt from income tax, provided that should the holder of certificate terminate the deposit or investment before the 5th year, a final tax should be imposed on entire income and shall be deducted and withheld by the depository bank from the proceeds of the long-term deposit of investment certificate based on remaining maturity thereof. MP, what's MP? MP is 4 years or less than 5 years, 5%. MP is 3 years. Maturity period for less than 3 years to less than 4 years, 12%. MP is less than 3 years, that's 20%. Informer's reward to a person instrumental in the discovery of violation of the National Internal Revenue Code and the Tariff and Customs Code, such as in the discovery of seizures of smuggled goods in the Philippines, 10%. The reward is equivalent to 10% of the value of the revenue collected or the goods confiscated, or 1 million pesos, whichever is lower in amount. Number 3. This is final income tax on fringe benefits. As mandated by law, these final income taxes, however, shall be paid as fringe benefit tax by the employer rather than employee who earned or received said fringe benefit income. Gross up monetary value of taxable fringe benefit given to employees classified as resident citizen, resident alien, non-resident citizen, non-resident alien engaged in business in the Philippines, 32%. Gross up monetary value of taxable fringe benefits given to employees classified as non-resident alien not engaged in business in the Philippines, 25%. Gross up monetary value of taxable fringe benefits granted to employees classified as safe, 15%. Note, however, those actual or presumed capital gains on sale of capital assets located abroad and those passive income earned from abroad are not considered subject to final income tax under the foregoing provisions. These items of income, capital gains and passive income derived from abroad, shall be included in a declarable gross income world subject to basic income tax on the part of recipient resident citizens. However, these items of income, capital gains or passive income derived from abroad shall be classified as exempted from income tax on the part of individuals who are not resident citizens, such as resident aliens, non-resident citizens, non-resident aliens, and resident alien Filipino employees. Alright. Final income taxes for non-resident aliens engaged in the business in the Philippines. Not non-resident alien engaged in the business. Same final income taxation for the items of the income transactions under A, B, C, D, and that's the capital gains. So, not resident alien engaged in the business in the Philippines, same for capital gains. And then number 2, A, B, C, D, F, G, L. However, for the items under number 2, H and L, these shall be subject to 20% final tax. So, for the non-resident alien engaged in business in the Philippines, for H and L, which is cash property dividend from a domestic corporation or from joint stock company, insurance company, mutual fund company, or from regional operating headquarters of multinational corporation in the Philippines, this is 20% for non-resident alien engaged in a business in the Philippines. And share in distributable net income after income tax of ordinary partnership, an association, a joint account, or a joint venture or consortium which are taxable as corporation, also 20%. These two items are 10% for the resident citizens, resident aliens, non-resident citizens. Okay. However, for item under number G, these shall be exempted from income tax. So, letter G, interest income from depository bank under expanded foreign currency deposit in the Philippines. So, this if it's non-resident citizens, if it's not non-resident alien engaged business in the Philippines, this is exempt, while 7.5 for resident citizens and resident aliens. Alright? Final income tax on unresident alien not engaged in business in the Philippines. So for capital gains, it's the same. Non-resident aliens not engaged in business in the Philippines. However, for items number 2, so for the rest, number 2, all the other ones that I mentioned earlier, these shall be included in taxable gross income from Philippines subject to 25%. Alright, that's the difference. Alright, all that and numbers except for letter G, of course, the interest income from a depository bank under expanded foreign currency deposit system in the Philippines. So it's usually 7.5 for resident citizens and resident aliens, but then it is for non-citizen, not citizen of the Philippines, that is exempt. Alright. Final income tax for special alien or Filipino employees. Apply the same pertinent final income tax rules as the case may be, imposed and say further classified either as resident citizen, resident alien, non-resident citizen, non-resident alien engaged in business in the Philippines, or non-resident alien not engaged in business in the Philippines. Final income tax for minimum wage earner. Apply the same pertinent final income tax rules as the case may be, imposed on WMWE, classified either as resident citizen, resident alien, non-resident citizen. Final income tax rules on capital gains from sale of real property. In general, a provision of Section 39 of the NIRC notwithstanding a final tax of 6% based on a gross selling price or current fair market value as determined in accordance with Section 6 of NIRC, whichever is higher, is hereby imposed upon capital gains presumed to have been realized from sale, exchange, or other disposition of real property located in the Philippines, classified as capital assets, including pacto de retro sale and other forms of conditional sales by individuals, including estates and trusts, provided that a tax liability, if any, on gains from sales and other dispositions of real property to the government or any of its political subdivisions or agencies, or to government-owned or controlled corporations shall be determined at the option of the taxpayer, either under basic income tax, the capital gain is part of the gross income subject to graduated basic income tax, or under final income tax, the presumed capital gain shall be subject to 6% final capital gain tax. Exception: sale of real property located in the Philippines if capital asset in its principal residence. The capital gains presumed to have been realized from the sale or disposition of their principal residence by natural persons shall be exempt from the final capital gains tax if the following requisites or conditions for tax exemptions occur. A sale proceeds is fully utilized in acquiring or constructing a new principal residence within 18 calendar months from the date of the sale or disposition. The commissioner shall have been duly notified by the taxpayer within 30 days from the date of sale or disposition through a prescribed tax return of his intention to avail the tax exemption herein mentioned, and the said tax exemption can only be availed of once every 10 years. If there is no full utilization of the proceeds of sale or disposition, then the unutilized portion of the sale proceeds shall be subject to the final capital gains tax. For this purpose, the gross selling price or fair market value at the time of sale, whichever is higher, shall be multiplied by the fraction which the unutilized amount bears to the gross selling price in order to determine the taxable portion. The final income tax formula: unutilized sales proceeds divided by gross sales price multiplied by fair market value or gross sales price, whichever is higher, is equal to taxable unutilized portion multiplied by final income tax rate of 6% is equal to partial final income tax. That is the formula number 1. The second formula is compute for the full 100% final capital gains tax, gross sales price or fair market value, whichever is higher, times 0.06 or 6% is equal to final income tax. Determine the percentage rate of unutilized sales proceeds based on sales price. Unutilized sales proceeds divided by gross sales price equals the percentage rate. Compute for the partial income tax 2. Final income tax percentage of rate of unutilized proceeds is equal to partial final income tax. In general, the final income tax return for the sale of real property located in the Philippines shall be filed on a per transaction basis on any day within 30 days from date of sale, and a final capital gains tax shall be paid in full by seller transfer upon filing. As a consequence of the tax exemption, the historical cost or adjusted cost basis of the real property sold or disposed shall be carried over to the new principal residence acquired either by purchase or by construction as follows. If there was a full 100% utilization of sales proceeds to acquire a new principal residence, the historical cost or the adjusted cost base of sold old principal residence shall be considered as the basis of new principal residence in the event that such property will be later on sold.